Imagine a world where a single AI company grows 80 times over in just 3 months.
Right, which is just an absurd metric.
It's totally absurd.
Yeah.
But then at the exact same time, you can't buy a gaming console without paying this massive premium.
Well, assuming you can even find one in stock.
Exactly. And why? Because the entire globe has essentially run out of memory chips. Welcome to the great AI bifurcation.
It's a profound contradiction that really defines where we are right now.
Yeah.
You look at these record-breaking stock rallies for AI software, but beneath the surface, there's this incredibly complex web of structural stress tests happening across the whole industry.
This is the Tech News Roundup from 10,000 news articles in the last week. Today we're doing a deep dive into the explosive rise of agentic AI, the crippling global memory crisis, massive geopolitical power shifts, and the hidden cybersecurity risks threatening everything from your local schools to global supply chains.
Yeah, we are moving way past the theoretical phase of AI. It's no longer just some chatbot on a screen, you know. It's an active participant in the economy. And that collision with the physical world is creating some huge winners, but also some really unexpected casualties.
So let's start right there with what I think is the single biggest signal from this week's data. It's this physical collision between infinite software ambitions and finite hardware realities.
That's bottleneck.
Exactly the bottleneck. Because the numbers coming out of the AI space are just staggering. Anthropic just reported 80 times revenue growth in their first quarter.
Wow.
Right? That pushes their revenue run rate to $30 billion. They are rocketing toward a $1 trillion valuation. And this isn't just, people paying $20 a month for a subscription.
No, not at all. This is massive enterprise-level API usage, and that volume requires just an unfathomable amount of processing power.
Which explains their big move this week.
Exactly. To fuel that specific $30 billion run rate, Anthropic just inked this massive compute deal to absorb essentially all of the capacity at SpaceX's Colossus 1 supercomputer.
It's a total land grab for computing power.
It really is.
And OpenAI didn't just sit still either. They launched GPT 5.5 Instant, which dramatically reduces hallucinations. But actually, I want to pause on that for a second.
Sure.
We hear hallucinations all the time. From a technical standpoint, how does reducing them actually change the game for an enterprise?
Well, it completely changes the risk profile. I mean, when an AI hallucinates, it's basically confidently generating mathematically probable text that just happens to be factually wrong.
Right. It sounds smart, but it's making things up.
Exactly. But GPT 5.5 Instant introduces this deterministic fact-checking layer right into the generation process. Because, look, for a hospital or a bank, a model that makes a mistake 1% of the time is completely useless.
Yeah, the liability is too high.
Right. But a model that makes 0 mistakes, or at least flags its own uncertainty now, that is a product you can actually deploy.
Which explains the insatiable demand. And that demand is why Samsung's market cap just crossed the $1 trillion mark.
Yeah.
But, Samsung isn't building the foundational AI models. They're making the high bandwidth memory chips, the HBMs, that those models physically require.
Okay, let's unpack this. Wait, sorry, you go ahead.
No, I was going to say, okay, let's unpack this. Because I think people misunderstand compute versus memory. Think of compute power like the size of a chef's brain. Right?
Yeah, I like this.
And the memory chips are like the physical counter space in a kitchen. It doesn't matter if you have the smartest, fastest chef in the world. If they only have a cutting board the size of a postage stamp, they cannot physically prep a 10-course meal.
That captures the dynamic perfectly.
Yeah.
And to stretch that kitchen analogy, the biggest tech companies in the world have essentially bought up all the stainless steel countertops on the planet.
Leaving nothing for anyone else.
Exactly. What's fascinating here is that the hardware bottleneck, not the software capability, is the true speed limit for tech right now. And this matters immensely to you, the listener, whether you're buying consumer gadgets or running a business.
Right, because it permanently alters consumer pricing. We're already seeing the casualties. If you're trying to build a PC, motherboard sales are collapsing because RAM and GPUs are just too expensive.
Yep. Apple is even cutting the RAM options on their new Macs because they can't secure the supply at a reasonable margin.
It's wild. Big tech is projected to spend $725 billion on AI CapEx just to secure this hardware. I mean, is that level of spending even sustainable? Won't that crush their free cash flow?
It's a huge structural stress test. For a long time, software outpaced hardware constraints. Developers could write sloppy code because the processors would just brute force it. Now, physical atoms dictate the roadmap.
Which begs the question, are we entering an era where only the tech titans can afford the memory required to build the future? Because if these memory chips are entirely bottlenecked by a few factories in Asia, this isn't just a tech problem anymore, it's a geopolitical vulnerability.
Oh, absolutely. Because AI requires data centers and data centers require massive electricity, the tech sector is now completely tied to global energy and geopolitics.
Which is exactly what we're seeing play out in the macro data. The Iran war is disrupting global oil, causing U.S. gas prices to spike by 50%.
A 50% spike is huge.
It's massive, and it's triggering real recession warnings from major consumer brands like Whirlpool and Toyota.
Right, because that energy shock ripples directly into the cost of running those server farms and manufacturing those chips.
And then you throw in trade policy whiplash. A U.S. court just struck down that proposed 10% global tariff.
Which completely scrambles the math for anyone trying to import electronics right now.
Exactly. Meanwhile, the regulatory divergence is just wild. The EU agreed to simplify their AI Act, but they outright banned notification apps.
Yeah, taking a very hard stance on the ethical applications, prioritizing citizen protection.
But contrast that with the U.S., where the focus is entirely on security.
Right.
The U.S. government just secured early, pre-release access to test models from Google, Microsoft, and xAI. So let me push back a bit here. If the government is checking models before release, does that slow down innovation, or is it the only way to stop a digital pandemic?
It's a really tough tightrope to walk. What you're seeing is regions positioning themselves based on their historical strengths.
Right.
So South Korea is solidifying its dominance as the memory powerhouse. The EU is playing the global compliance officer. And the US is treating AI like a national security asset, sort of like nuclear tech back in the day.
Which means multinational enterprises are dealing with fractured compliance regimes.
Yes, and this matters because you no longer have a single global playbook.
And that regulatory squeeze, combined with the hardware shortages, is completely rewiring investor psychology. It's dictating where the capital flows. Let's look at the market realities.
The shift is happening so fast.
It really is. AMD's data center revenue just officially overtook Intel's for the very first time.
Yeah, a historic changing of the guard. And it really comes down to architecture. Intel stuck with monolithic chip designs for too long, while AMD pivoted to a modular chiplet approach.
Which is way better for AI workloads.
Exactly. And the market is rewarding them for it.
Meanwhile, the memory crisis is hitting the consumer side. Nintendo is raising the Switch 2 price by $50. PS5 sales are declining. And Apple just agreed to a $250 million settlement over delayed Siri features.
That Apple settlement is a massive warning sign against overpromising AI capabilities, or vaporware.
Yeah, definitely.
But there's an underestimated signal here, too, one that hits the labor market. We're seeing the start of the apocalypse and the rise of the player coach.
Here's where it gets really interesting. Because if you're a listener right now, especially in middle management, this is a massive flashing warning sign. The whole pure per seat SaaS model, where companies pay for software licenses for every human worker, that model is dying.
It's collapsing. Because companies aren't buying software seats for humans anymore. They're buying compute to run AI agents that do the work of 10 humans.
Right. Why pay for 50 Salesforce licenses if you only have 5 human employees managing a fleet of autonomous sales agents?
Exactly. And the layoffs reflect this. Cloudflare cut 20% of its staff this week. Coinbase cut 14%.
The irony here is that tech companies are firing the very people who built these AI tools in the first place. Middle management is being automated out.
Yeah, Coinbase explicitly said they are replacing pure managers with player coaches. People who actually write code but also manage a small team. It's a permanent flattening of the corporate structure.
So investor sentiment has shifted from this blind AI optimism to cautious cost-cutting.
Oh, absolutely. Investors are no longer funding AI tourism. They don't care if you slap a chatbot on your website. This matters because they now demand measurable productivity gains or direct revenue generation.
But there is a huge risk to this flattened structure. Because while investors are happy and companies are cutting staff, the IT departments are fighting off a terrifying new wave of threats. AI is basically proving to be both the ultimate lockpick and the ultimate padlock.
Yes, the attack surface has fundamentally changed. When you replace human oversight with agents, you introduce vulnerabilities at machine speed.
Let's look at the security incidents. The Canvas hack by shiny hunters disrupted 8,800 schools right before finals.
Awful timing.
Yeah, brutal. And then there's the Linux Dirty Frag zero-day vulnerability giving hackers root access across major distros. Just briefly, how bad is that?
It's as bad as it gets. Root access means having the master keys to the server. And Dirty Frag works by fragmenting malicious code into tiny pieces that slip past firewalls and then reassembling inside the network.
Wow, but then on the defense side, Mozilla used Anthropic's Mythos AI to scan Firefox, and it found 271 zero-day bugs with almost no false positives.
Which is incredible, because traditional tools operate on rigid rules. But an AI like Mythos actually understands the context of the code. It finds logical loopholes that human researchers would take years to spot.
That actually brings me to a huge overhyped signal. We constantly hear this media narrative that AI will autonomously take over the world, Skynet style.
Yeah, that's a massive distraction.
Right. What is the actual risk right now?
The actual risk is vulnerable enterprise infrastructure and something called vibe coding.
Vibe coding. Okay, explain that, because I love that term.
It's basically when junior developers use AI to generate complex code, and they deploy it without security guardrails just because the vibes are good, like, it looks like it works during a demo.
Ah, I see. But underneath it's full of holes.
Exactly. They might accidentally expose API keys or mishandle memory. That's why platforms like ServiceNow are desperately building AI kill switches.
Which raises a big rhetorical question. When the attacks are generated by AI and the defenses are managed by AI, where exactly does the human security team fit in?
Well, if we connect this to the bigger picture, the human role elevates to governance. Traditional perimeters are useless against compromised AI agents already inside your network. Humans have to define the guardrails and control those kill switches.
So given all of this, agents taking over tasks, hardware prices surging, security threats, what happens next? What are the trajectories here?
Well, looking at the short term, the next 30 days, expect immediate consumer pain. Memory shortages mean higher electronics prices and delayed upgrades.
Nobody wants to hear that, but yeah. And what of the medium term, say 6 to 12 months?
Agentic AI shifts from chat interfaces to background automation. We'll see screenless AI wearables rolling out, like that new $99 Fitbit Air. Health and AI are just completely merging.
And the multi-year structural shifts.
Big Tech's $725 billion infrastructure spend is going to heavily strain global power grids. It's going to really test the limits of their free cash flow.
So what does this all mean? We're seeing stable momentum for AI infrastructure, right? The hardware makers, the energy providers, but a severe cooling down of traditional software models.
Exactly, this apocalypse.
Yeah. And if your workflow is entirely managed by AI agents and your decisions are pre-vetted by algorithms, who is actually doing the work?
It's a wild paradigm shift.
It really is.
Yeah.
So just to summarize today's deep dive. First, the tech landscape is rapidly bifurcating between massive AI infrastructure winners and legacy software losers, all squeezed by a severe memory crisis. Second, as autonomous agents move into enterprise production, the cybersecurity and regulatory risks are forcing a total rewiring of corporate governance. And third, the hardware supply chain, not software capability, is the true speed limit for the future.
That sums it up perfectly. And I'll leave you with a final thought to mull over.
Go for it.
We've talked about AI writing code and finding bugs, but as these agents start managing budgets and workflows, what happens when autonomous agents start negotiating against each other for their own resource allocation during a hardware shortage?
Oh, wow. That is a slightly terrifying thought to end on. AI fighting over the last memory chips. Visit newsbite.tech for more tech news and bites.